What's up? Just going to give you a few minutes to go over what the Fibonacci retracement tool is and how I use it in trading. So first thing is that I use TradingView for my charting software. It's free. I do pay for extra services because I like indicators to come up for me. One thing you can do is you can search for tickers up here in this box. I already have one pulled up, Amazon, and then you can look at a time frame. To show you first and foremost, I just want to start at high time frames and then work our way down lower here. So the Fibonacci retracement tool is something that uses the golden ratio of numbers, which is known as the Fibonacci sequence. It appears all throughout nature, math, science, etc. This is when numbers build on one another. 1.618, 2.618, all that stuff, you'll get to see it once you get to use it. But if you're interested in learning more about the Fibonacci, it's a really cool concept, but I just want to show you how it's used in trading. So first and foremost, the Fibonacci ratios that you'll see are actually more percentages that go with price. So I'm going to pull one as an example here for you. The Fibonacci retracement tool is found over on the left-hand side, Fib retracement. And you want to, for example, click and drag from the lowest point that you want to look at to the highest point. So I have here the monthly for Amazon. I'm actually just going to drag this like this so I can fit it a little better. I'm going to pull from this point right here. This is not really anything of significance up until this high point, the top of this wick of this candlestick here, and stop it just so I can show you an example. So here's an example of a Fibonacci retracement. It's called a retracement because it's going back over price that has already happened. The best way to predict future price movements or future behavior is looking at past price movements or past behavior and seeing if it will repeat itself. There are three main levels that you will work with in a Fibonacci sequence that are of the most significance. That's going to be the 618. Let me make this bolder and brighter. The 618 level, the 382, and the 0.5. The 0.5 is not actually a number in the Fibonacci sequence. The 0.5 is a number that traders have been using to divide up the 618 and the 382. What the 618 and the 382 actually are is this is 38.2% of the price difference from here to here, and the 618 is 61.8% of the price from here to here. Whenever you're pulling your Fibonacci retracement tool, the bottom is essentially 0, as seen as here, and the top is essentially 1, or 0% to 100%. That means the 0.5 is 50%, so that's your halfway mark here. Why traders use the 618 and the 236 or the 382 is that this is where probabilities start to come into play for you. If you think about something being 50-50, you're not very sure about it, right? When things get to 60-40-ish level, then you have more of a sway in one towards the other. Significantly, or as another significator, I guess you could say, when you're extending or swinging towards the 70% range, you're really strong probabilities on the highs, and 20-ish% range, you're really strong probabilities on the low. So to best get this concept across, I'm actually going to show you how to use it over and over again on different levels. So we're going to start from high time frames and go lower. So on the monthly here, you can actually, let me redo what I did. So what you can see is you can see that Amazon's price had ranged, it started, and it climbed up slowly. It consolidated in some ranges before breaking through price ranges. Some traders believe that the Fibonacci sequence is like just a hoax, that because so many people use it, it helps to control price, and other people just see it as a probabilities tool. Here you can see that Amazon is a growth stock. It's going from 0 to 100 real quick on my jerseys, right? But it hasn't really retraced. Usually, if a stock is not like a growth stock or crazy on a run-up like Amazon is, you'll see it move, and then it will want to retrace or retest previous levels. So we'll see that in some other stocks that we look at. So let's stick with Amazon for now just so I can show you the differences. So we're going to move from the monthly to the weekly. When I'm pulling from a swing low to a swing high, what I mean by swing lows and swing highs are the following. A low point in price to a high point in price. Not always the lowest point you can find to the highest point. This individually is called a swing. When J Money says he's a swing trader, this is what he aims to play. He aims to play the bottom of a price movement and the top of a price movement. So this right here is an example of a swing. I can take my Fibonacci retracement tool and click from the bottom, the wick of the candlestick, to the top of that swing where it stops, right here. And you can look at how price reacted to the levels within here. You see that price bounced in between the 382 and the 618 here before moving up to the 1. Oh, I didn't want to take away that. We can take away this. Another swing low to a swing high that we can see here. Let's say that we wanted to hold Amazon for a longer time frame. Then you would want to look for a swing that's a low price to a higher point of price. So I'm going to pull this Fibonacci tool from this swing low right here, the low that made the high. In this run, you could use this wick, but more accurately it's this wick because you haven't really had a lot of chop here. So you can pull to here. And you can see now that price is starting to consolidate within a range. Fibonacci retracement tools can be used to help you identify those price ranges more easily. So you can see here that the price was stuck in between 33.14-ish, 33.09 to around 29.56. Okay. Let's go to lower time frames now. On the daily, that's the same thing. So let me go to 4 hours. Let's say you want to trade Amazon just for like a month to 3 months. You want to be able to see months within your chart and look at higher time frames, which shows you different swings in price. I see a significant, when you want to pull these, one thing the beginners do wrong is that they will pull from too recent of a price. You want to have an old block of price data where you see that there was a low that was held and a high that was achieved, and then price changed after. So this whole chunk that I'm talking about from here, the high right here, to the low right here, is a price mover or a price block. But it's a swing low to a swing high that we're about to pull a Fibonacci retracement on. I chose this because it's not super close to these ones. It's not the right behind price, but that works also. But let me show you what we're working with. So from the swing low, the low of this wick, to the swing high, baby. Now you can see how price has reacted. So you see how price went from the 0 to 100 point here. It went down, and price likes to bounce primarily between the 618 and between the 382. Do you see how this price consolidated? The majority of time it spent was within this range, because it's unlikely that stocks are going to dump and spend time where they already had near their bottoms, nor spend a lot of time near their highs. Every time they're going to subsequently push a little bit higher and then go push a little bit higher, but it happens over time. This is why the majority of time the price will stay within these ranges. So you saw that price came back to consolidate. When it holds and achieves a level, for example, the 236 or the 23.6% of its price, it's likely that you could anticipate it moving up to the 382. With Amazon here, I'm betting there was some volume. Show me some volume, peeps. Some buying volume that drove up the price. It held here as the 618 as a support. Oftentimes the Fibonacci levels are used as supports and resistances. Here you see that it ran up again, dipped below, and now it seems likely, if you're trading right here in this range, you're going to ask yourself, where's my next support and where's my next resistance? Without even looking at any other specific candles, you can say, I'm betting that price is going to stay within 3,404 or 33.27. That's how you can use this tool, right? Also, once it's achieved here, it's highly likely, look at what price did in the past, that it could also dump down to here and stay range bound, or if it has positive volume, buyers, other indicators are showing strength, or there's some chart pattern, like here there's a little gap fill, that it could move up in price. What I see right here is a little bit of a bear flag, but this is usually, with this price movement, this was a huge drop. A 10%, not really heard of. So we'll see on that one. Let me use a different ticker so I can show you some better examples here. Let's look at Chewy. Chewy on a big time frame is doing an inverse head and shoulders pattern. So this is really fun when you get to use Fibonacci retracement tools, because you can use these patterns as your swing lows and swing highs to help predict price. So I can see here I am kind of topped out here on this side, finishing out this inverse head and shoulders pattern. What I can do is I can use the Fibonacci retracement tool, and I can retrace from a swing low to a swing high. I don't always have to go to the right. So let me show you what I'm going to do this time. I'm going to swing it to the left to this high point right here. Why did I choose that? Because you see where price is at right now. It looks like the next level it needs to achieve or surpass would be right here. This is also a completed swing high to a swing low. So let me do a swing low to a swing high. My black line, my one line, is where I'm trying to line up this candlestick or this wick to. So let's say that I hadn't done this yet, and I was curious about where price was going to go on Chewy. I could have sat here and said about here, or I could have pulled a Fibonacci, which tells me essentially the same thing, look, just by a couple cents. Why I prefer Fibonacci's instead of just identifying levels is that it kind of does the work for you. Look at where some of these other key areas are. I'm just going to mark all of these fib levels and then remove the tool so I can show you how many are used as supports and how many are used as resistances. So you see here we're achieving, we're holding, we're achieving, we're holding. From here we're range bound between this price 87.36 to around this price 76. If I pull a fib, I can see more easily that is the 618 and the 382. So essentially the Fibonacci tool, what I use it for is bigger time frame price targeting. If I wanted to, I could, if I were wondering how far up this inverse head and shoulders might play, I could pull from the swing low here to all the way to the swing high back here, in order to help establish my price targets and also be realistic about where price could fall so that I'm not being biased. So right here I can see that the one of this swing, the potential for where it could go based on where it has been, is around $120. But before it can get to $120, it likely needs to achieve this, needs to achieve this, and then needs to achieve this. I hope this answers some of your questions. I'll go ahead and just do a few random pulls on some random tickers. So there's Sally Beauty, which J Money alerted this week. And I'm going to look at a smaller time frame for this, because let's say we just wanted to swing this over a few days. If you were choosing here, you'd want to look for the high points and the low points on your chart. Here's a swing low, here's a swing high. Look where price is at. This is a good place. This can be a good place to get in if you're wanting to do quick turnaround, because it could achieve here. Whenever price achieves the 236, it wants to push up to the 382. The 382 and the 618, it's happier moving around in because it's pretty much a midway point, right? It can range there. If it starts leaning too much on the top side, it wants to boom up. If it starts coming a little more to the bottom, it wants to dump. When you look at this stock in the big term, right here, I personally would wait until here to enter because of the history of price here. That also gives me more strength to the upside. But with the insider trades, that's the edge of the service that CEO Watchlist provides, right? It shows that there's a lot of buying happening here by some insiders after earnings, so that it's likely to go up. Another ticker. Give me this is a penny stock that was traded this week by some this one's hard to see. Let's go in smaller time frames. I just don't like this because there's not a lot of volume. You can't really see the candles to pull one. So let me pick a different one. All right, so here's one that shows a deviation in price. Whenever I'm looking at charts, I first look at bigger, higher time frames to see general trends. Then I'll go down to smaller time frames to see trends there. You see how we saw it was going up, but here it looks like it's trading pretty sideways locally. Let's look at Datadog. Datadog looks like it's on the verge of a breakout, or it could have broken out today. Yeah, it looks like it had a bit of a bull flag pattern and then a little breakout, but it wants to retrace already. So let's zoom back out here to the 1 hour. So let's pretend that we rode this Datadog breakout, that we caught this gap up, and we're wondering where price could go next. We want to find a previous swing high and swing low to pull our Fibonacci retracements off of. We don't ever want to go too far back in price. For example, I wouldn't want to come back here to 2020 and pull this here to here. But in Datadog's case, since the price has been trading pretty sideways and consolidating, it still would probably be pretty relevant. But we'd want to look more closely to something in the last few months. So we could do something as small as this right here, or we could do something a little bit bigger like here. Let's do that. So you see, I'm going for this top here. I'm just stretching it out because as a person, it helps me visualize here without my mouse blinding me. So from this swing low to this swing high, we're retracing price. That's why it's called a retracement tool. We can look at where Datadog could go. If somebody were to have said to you in April, Datadog will be trading at $132, you'd be like, no, it's not, because it's not even at the 1 on the fib levels. But here, when you pull fib levels, you can actually see, they can go on exponentially. The Fibonacci sequence, this is why it's cool to learn, because it talks about petals of a flower, seashells, like the Nautilus pattern. It's about patterns and things repeating themselves. So here, let's say I wanted to hold Datadog in my long-term portfolio for a long time, and I'm like, I wonder where price could go. Datadog, in a year or two, pending good volume and earnings and things, could run up to 187, 230, or 256 in price. Currently, if it continues its crazy uptrend, it could go as high as 145. Realistically, is it going to? It more than likely, since it didn't come back and retrace many of these levels, it kind of flew through them. It will want to come back down at least to this point, where you see previous resistance, previous peaks here, before continuing an uptrend. Now, here's something I want to add before I cut off, because I know I'm getting long-winded on this, but you can customize these levels by going to settings in this tool, and you can click and add and type in some more. So let's say that I wanted to zoom in on this price. I wanted to see the price differences between the 1 and the 1.618. What I would do here is, let me take out all of this other stuff. I'm just going to repeat these numbers but put a 1 in front of them. So I have a 1 here, so I'm going to do 1.236, 1.382. My next one is 5, 1.5. My next one is 618, 1.618. Oops. My last one is 786, 1.786. I have a 2. My last one would be 2. Come down here, hit OK, and we can look. And now we have personalized Fibonacci retracement tools to help us understand price a little bit better. So realistically, how I said Datadog probably wants to come back to this level to retrace, and I think it will, because it's left a big gap fill here, and anytime price leaves a gap, it just wants to go confirm it. Sort of acts like a magnet, right? But before it does, it could stop here at 129.29 and continue bouncing on some crazy momentum, or it could come down here and bounce and retrace, or it could just range in this area for a while. So it really, the Fibonacci retracement tool is a tool that allows you to base future price action on past price action. I hope you found that helpful. You can follow up with me any questions, but the key levels when you do, let me pull up a random one right here. Key levels for you to watch are depending on the ranges that the price is at that you're trading and your strategy. You could be a trader who basically only trades small ranges, or you could be a trader who only trades here and here, or you could be the trader that always tries to snipe bottom and carry it up. With NEO, you could have done that. You could have had your fib pulled from here to here when you noticed this was a bottom of this head and shoulders that NEO was doing. And you could say, okay, it's time for me to buy because I don't think that NEO's going to go down and retrace. This is sort of like the Sally Beauty play, right? Instead, I think it's going to go up. And if it could go all the way up to 1, then I've got $30 here and a $64 PT here. And that's a pretty solid risk to reward ratio. So I hope that basically helps you out. The basics of, or the mechanics of pulling the fibs, I'll show you a few more times on a few other plays. Let's do randoms. I'll go on a small time frame. I haven't done a small time frame for you. 15-minute chart. Let's say I'm doing this swing low to swing high. You can see where price is acting. Go on the 3-minute. I always magnify price to help me identify swing lows and swing highs. This tiny one. If I'm really playing here intraday, just on the last 2 weeks time frame, swing low to swing high. Smaller time frames, smaller fib pulls, smaller time frames, bigger fib pulls, bigger time frames. Let's do another one. 30 minutes. Let's say you were wanting to do a vaccine play. You see that it's in a general uptrend. You want to catch a swing low to a swing high that covers a lot of price over the last year's worth of data. Find the low and pull it to the high. That's right here. If you don't understand what I mean when I say swing low to a swing high, let me zoom in and show you. Do this first. This is Johnson & Johnson. Here you have a swing low to a swing high. It's where price was achieving and then stopped before coming down again. A swing low to a swing high. A swing low to a swing high. A swing low to a swing high. Bigger time frames. A swing low to a swing high. Swing low, swing high. If I wanted to, and you saw how I was pulling that fib from down here all the way to higher points, you can look at this as a swing low to a swing high. It all depends on timing and sizing. Timing and sizing. Let me check my notes and make sure I didn't leave anything yet. Fib levels, percentages, golden ratios, keys. Try and avoid, here's just a trick for you. Try and avoid anything. The reason the 618 and the 382, these ranges are better, is because it gives you better risk to reward ratio. Trying to snipe bottom and be that guy that's like, yeah, I got Johnson & Johnson at, $130, $165. I knew it would run. You really didn't have probability on your side. 70-30 probabilities are better than 60-40. 60-40 probabilities are better than 50-50 probabilities. My advice to you is when something is within the 0.5 range or the 50% range, look for confirmation that it moves up and it reclaims, meaning it retouches the 618 level and confirms it as support before uptrending. And you see it did that here. It tested it and it tested it, and that means the price is going to move up. Because if it doesn't come here and test this, where it's likely going to go is here. And use this as a support. So trading at the 50% range, you don't have probability on your side because it can go 50 or 50. And it can go 50-50 pretty quickly. All right. Hope that was helpful. Talk to y'all later. Peace.